I'm here to discuss GST as it applies to land and property with BDO tax experts Mark Lodder and James Peck. Hello to you both.
Hi, Madison.
Damn.
Mark, can you please start by giving us a broad overview? What should landowners thinking of selling be aware of as it relates to GST, or potentially anyone looking to buy land too?
I guess the first thing to think of immediately is, are you a GST registered landowner? So if you're a GST registered landowner, am I applying GST to the land at 0% or 15%? And that will be driven by the purchaser on the whole as well. So the rules changed a few years back. Land, of course, is one of our an expensive asset, and there might have been circumstances where a person buying land would have claimed the input tax, but the output tax never found its way to the commissioner, which is why we have a zero rating provisions for land. So very broadly, if the landowner and the purchaser are both GST registered persons, we have to make written representations, etc., within the sale and purchase agreement, then we can zero rate, or we are required to zero rate that purchase transaction. If the purchaser isn't GST registered, the landowner is GST registered, then we're going to find GST applying at 15%. So we've got to work through all these mechanics of GST output tax, input tax, 0%, 15%, and working through the cash flows. But that's a very, very broad overview if the landowner is a GST registered person. If the landowner isn't GST registered or required to be, then of course there's no GST on the transaction. But from the purchaser's perspective, can they claim a second-hand goods input tax deduction, which is a cash flow positive to them if they are registered and they're going to use the land for a GST activity. So that's a very broad overview.
Okay, James, can you please give us some more detail on how this all works? What are some common errors that landowners or purchasers make when they're making that calculation?
Well, I think there's probably two things I want to touch on. One is where the second-hand goods claim Mark just mentioned is where a GST registered purchaser is going to buy land off a non-registered person and is expecting to be able to claim 3/23 of the purchase price, which will reduce their cash flow position on the purchase. But sometimes Inland Revenue will review that claim as part of their refund process, and they may determine that the vendor should have been registered for GST. Say they've been leasing the land to an associated person and not charging enough rent for that land. And if that's the case, then the vendor would become registered and the transaction could no longer be zero rated. And so the purchaser would miss the claim that they were expecting. That would obviously be a bad cash flow outcome for the purchaser. There would be protection under the sale and purchase agreement for the purchaser to effectively sue the vendor for misrepresenting their position. But in some cases, that could be quite hard to extract. They could be a company they might have liquidated, that type of thing. Where we're concerned that the vendor may have to be registered, but they're purporting they're not, we might hold back some of the purchase price in escrow and wait until the refund has been approved before we release the remainder. The second thing I wanted to just touch on quickly was where, say, a purchaser wasn't intending to use the property to make taxable supplies, so then they might have agreed a GST inclusive value with the vendor, and so in that case the vendor would be expecting to remit 3/23 GST to Inland Revenue. There could be, in some cases, if you buy from a developer, a long period before settlement occurs, and say the purchaser might change their mind and have become registered for GST in the meantime, and say they're carrying on a Airbnb short-term accommodation activity. In that case, the transaction would now change from a GST perspective. And because it's between two registered parties and the purchaser's using it for short-term accommodation, it would now be zero rated. What that would mean is the vendor would have a windfall gain because instead of having to remit 3/23 of the price, it's now GST at 0%. And so they could adjust their GST position with Inland Revenue and get that back. And there'd be no claim for the purchaser. So the purchaser's effectively been disadvantaged because now they've taken over the GST status of this property and they haven't sort of received any cash for doing so.
Airbnb is super interesting, Mark. Can you give us more details about the rules that would apply in such a scenario?
I think from an Airbnb perspective, what we see a lot is the accidental GST registered person. So as James mentioned, Airbnb activity is a GST activity. GST registration is required if your supplies or your sales are more than $60,000 in any 12-month period. So that's any 12-month period. That's not from 1 January to 31 December. That's from today to 12 months later, whenever. So it's a rolling 12 months. So if you think about the Central Otago, Queenstown market, and you might have bought yourself a batch that you're going to use as Airbnb when you're not in it, it's not that difficult to tip over the $60,000 threshold. So if you tip over that $60,000, you're then required to register for GST, and the surprise happens at the end in that when you sell the property, you have to be thinking about GST. And if you're selling it to a non-registered person, then you've got a GST cost on the way out. That's one of the issues with Airbnb. So really watch that $60,000 threshold. You do find some landowners will try and restrict bookings to stay under that threshold for that very reason.
So just to clarify, Mark, if you're selling a property or land, the GST inclusive isn't added to the sale price of that. It's rather a cost that you as the seller have to pay at the time of sale.
Correct. It's effectively a cost, because if you can think of a property in Queenstown might be worth 1.5 million, that's what it's worth with or without the GST. So if you have a GST output tax liability to pay, which is at 15%, that's your cost.
Interesting. A lot to think about. James, in such a scenario, what other things should a land buyer or seller be aware of?
Well, I think for the short-term accommodation point and the $60,000 threshold, from 1 April 2023, there's been a sort of new rule introduced referred to as the principal purpose test. And so just because I'm making accommodation supplies over that 60,000 threshold, if the principal purpose when I acquired that land and when I owned the land was not for making taxable supplies, so say it was to be a private family batch, and I can support that with the actual use, so say like how many days that it's used for throughout the ownership period, I might be able to get to a scenario where I can keep the actual asset out of the GST net under the principal purpose test. And you'd have to make sure that you haven't claimed GST when you purchased the land, or it was zero rated. Otherwise, that land would already be in the GST net. But there is that option under the new principal purpose rule just to be mindful of.
James, what about subdividing? Are there any traps in that scenario?
Well, I think the key thing we have to ask first is the vendor already registered for GST? If they're not, then the question is the subdivision development activity in its own right sufficient to require registration? And that looks at sort of the physical and professional work required to see if what they're doing is continuous or regular, which are the key requirements as to whether you have a taxable activity for GST. Inland Revenue released some guidance fairly recently about the level of work that would sort of cause concern as to what's enough for a taxable activity. And I think the key takeaway from that is a simple 1 into 2 subdivision. So say you've got a residential house with a bit of surplus land. If it was a 1 into 2 and there was quite a lot of physical work required to achieve that, that may be enough to actually require GST registration. And again, as Mark said, market value is market value for property. And so that could end up being something that the vendor needs to remit. So yeah, definitely whether what you're doing is enough to require GST registration is really important.
Plenty to be aware of. Thank you both so much for explaining it all.